What's going on in the Canadian housing market for March of 2022? Are we headed for recession? Hi, my name is Villar-Cisneros. Today, we'll look at 6 key issues that affects our economy as it relates to the real estate market in Canada. Number 1, inflation rate. Yesterday, the Statistics Canada released its report for March 2022. In March, the Consumer Price Index increased to 6.7% year over year. This is the largest increase so far since January of 1991. Now, if we exclude the gasoline, the CPI rose to 5.5% year over year in March. Speaking of the rising gas prices, it makes me wonder if shifting to a hybrid or electric car is the way to go. Personally speaking, the thought of buying an electric car has come to mind, but still, the price of hybrid and electric cars are still in the high and unreachable for so many at this point. And I can't justify the cost. I guess I'll have to figure out when I change my car towards the end of the year. Number 2, employment rate. Employment growth continues in March with the addition of 73,000 jobs, which is a 0.4% positive change driven by the increase of 93,000 full-time work. So if we look at the data pre-pandemic, sometime around the beginning of February of 2020, we can see that we have already surpassed that level in September of 2021. However, we see a big shift from the accommodation and food services to the professional services. Employment is up in 4 provinces, New Brunswick, PEI, Quebec, and Ontario, and the unemployment rate continues at a downward trend. Number 3, the Bank of Canada policy rate. Last week on April 13th, the Bank of Canada increased its key interest rate by 50 basis points, bringing the central bank's policy rate to 1%. This is the biggest individual rate hike since 2000. This triggered a second prime rate change from 2.7 to 3.2%. And as we know, the variable rate rides with the prime rate changes. So a lot of homeowners are wondering and asking the most popular question of the month. Should I lock my variable rate mortgage to fixed rate? By the way, check out my other video about is it time to lock my variable mortgage to a fixed rate for a detailed explanation on this topic. So we anticipate a few more hikes coming to us in the year. The question now is how soon will this change happen and will the household adjust to this? If these hikes comes at a faster rate than expected, then the speed of adjustment may pose a downside risk that may lead to recession. Number 4, mortgage interest rates. So whenever the Bank of Canada rates hike, the mortgage interest rate follows. And since home affordability is inversely proportional to the interest hikes, we anticipate a housing market to slow down. Actually, we've already seen a demand cooling off in March, and it will continue to do so if the interest hikes move in the months to come. Since the inventory is still low, we could still see a slight rise in the prices, but if it continues further, we'll see the price growth to flatten. So to give you a perspective, now we see price growth of 20 to 30%. Then we'll see some corrections. When this happens, we'll probably see more inventory as investors try to sell their investments to get out of the slowing market. Number 5, supply chain issues. So if the ongoing war in Ukraine continues a bit longer, it will be just a matter of time before we see the negative effect on the semiconductor production, which will affect the supply chain in the auto industry and other industries that depends on outside raw materials. And number 6, immigration. So how does immigration affects our Canada's real estate market? Canada's population grew by 0.2% in January of 2022. So this means that the demand of housing is clearly evident whether it's for rental or purchase. So all this, of course, is dependent on how this pandemic will play into the equation in the next months to come. So if the current trend continues, it seems that the pandemic severity has been coming down and it will come down. As for the highlights of the Canadian real estate market in March of 2022, the national home sales fell 5.4% month-over-month basis in March and fell 16.3 below the actual monthly activity compared to March of 2021. The number of new listings was down 5.5% compared in February. The actual national average sales price posted at 11.2% year-over-year gain in March at $796,000. So this was because of the Greater Vancouver and the Greater Toronto sales, two of the Canada's most active and expensive housing markets. So removing these two markets from our calculation brings the national home sales average at around $630,000. So sales were down in about half of the local markets in March, led by the declines in the Greater Toronto Area and Calgary. So there were 1.8 months of inventory on a national basis at the end of March 2022. So still strong sellers market. So are we headed for recession? At this point, it is unlikely, but things can turn for the worse with so many factors to consider. And at any changes to these 6 key factors can trigger a downside risk. According to Derek Burleton, VP and Deputy Chief Economist of TD Bank, the Canada's economic general growth is expected to continue. Canada's investment outlook is quite strong, and the goods spending is almost near the pre-pandemic at 4% and is expected to grow at a similar rate prior to pandemic. So how does the interest rate affect your plan of buying or selling a home? Please let us know by commenting below. If you have any questions regarding buying, selling, or financing a home, contact us. This is Villar-Cisneros with Homes by Lay and Right at Home Realty. And as always, at Homes by Lay, we'll make your real estate dreams come home.